How's it going, friends? Welcome back as always to Continues to Tick. My name is Jesse. I'm a dividend investor. Are you a dividend investor? And how long have you been investing in dividends? It's a slow journey. I started this thing back in the year 2020. So if you've been here for a while, you know we've been on this journey already for 3 years plus, going on to the 4th year come this next year in July. So time has continued to pass. We've continued to leverage our time as a dividend investor to help grow this portfolio, and hopefully for you friends as well, because the one pillar, a foundational piece to being a dividend investor is utilizing time. Otherwise, we'd probably be a growth investor. So for us, we have a lot of patience. We know that wealth happens over time. At least that's our strategy, that's our mindset. And it's a nice mindset to have, I would say, in times like these, where this economy is having a mind of its own in a way. There's a big disconnect between income and purchasing power. So it's an interesting time to say the least. But as dividend investors, we just have our strategy going in the background, knowing that a couple decades from now, we'll be all right. But here we are, friends, now in the monthly dividend portfolio review for October 2023. If you've been here before, you probably know what to expect on these monthly dividend portfolio reviews. But if you're newer and you haven't really seen one of these before, I'll let you know. As part of this dividend portfolio update, I'm always going to let you know how much I fund my portfolio and how often. I'll give you the most recent, and then as well, we'll dive into my sector allocations and percentages. This is the time where I actually like to dive into my portfolio and show you a little bit more. Apart from this, we'll also discuss my number of current holdings. I'll give you my current portfolio's dividend yield, as well as my expense ratio. And then I also like to discuss, my current short and long-term plans. This will be pretty brief because on my next video, I'll be telling you what my newer plans are. But I think it's important to just month by month, to just think about it, to continue to not only plant the seed, but water it as well with energy, thoughtfulness, mindfulness. Continue to think about where it is you want to go. Look out on the horizon and see it, envision it if you don't see it yet. Eventually, it'll pop up, right? And you'll see it and you'll know you're going exactly where it is you want to go. And that is financial independence, financial wealth, having a nice nest egg in retirement. It can mean different things for different individuals. All those actually align with myself. I want to have a good nest egg. I want to have what you would call to be a fat fire in retirement. I want money to not be an issue for me. The way I look at it, friends, is I don't want to work so hard in the workforce today to then also in my later years continue to worry and work for money. I don't want to do that. So I want to align myself as best as possible to avoid that scenario, which unfortunately seems to be very common. And it seems to be even more common nowadays with this crazy economy. But as always, friends, as part of this monthly dividend portfolio review, one of the most important and fun parts, I think, is letting you know how much my dividend portfolio currently pays me in dividends. And this is a good idea for you to maybe compare it to your portfolio, see how we are with each other's, see how much you're making, right? It's always kind of fun. Because this is the one thing we're working for. We're working towards having a good passive stream of income. Otherwise, we'd be a growth investor and we'd be selling chunks of our portfolio, liquidating it for some money, right, to then live off of. That 4% rule, right? But not us. We like the dividends. We like that passive payout that happens over time, that stream. But friends, in this video, as always in these videos with these monthly reviews, I always pick a topic to talk about. Today, I want to talk about the only solution to this economic mess. So before we dive into our portfolio review, you can feel free to skip ahead. I always put timestamps, but I just want to touch on, the one solution to overcome this. So let's begin. So friends, this economy has been eating at everybody's income coming in. It almost seems like there's just such a disconnect. The news, the Fed, everybody's saying, hey, the economy's doing so well. It's booming. It's the best it's ever been. But when you look at the day-to-day people, friends, for us, groceries are more, gas is more. Everything is a lot more expensive. At the same time, our wages just aren't keeping up with this inflation. At the same time, interest rates are also creeping up, trying to, get it from the back end, trying to slow this thing down. But people continue to spend. Money continues to enter this economy. And I think a lot of it is debt. It's hard to imagine that most people are actually doing as well as what the news is actually saying we're mostly doing. I can't get myself to really believe this. And on top of this, for people, who are younger of age, maybe people who are older of age, the housing economy as well, people trying to get into their first starter home, it seems nearly impossible, right, on the income that we're currently making. And then people who are older trying to downsize, it's not the best time to sell your house either. You're going to sell a nice house that you positioned yourself in, and the house you're going to buy is a lot smaller and probably even more expensive, right? So it's like such a gridlocked scenario, right? People can't even refinance their house either with these new interest rates, because then you'd give up your locked in much lower interest rate, right, when you initially bought your home. Everything is nice and messy, right? Wrapped into a mess. It's probably the nicest, most polite way I can put it. But the way I feel, friends, it's a little concerned, for sure. Like, I feel concerned about the economy, and it makes me think, right, what is the one thing we can do to overcome this economic mess? Well, really, friends, the only thing we could really do, unfortunately, is make more money. It almost seems like a game at this point. It's like everything continues to go up and our spending power continues to go down because of this inflation. Groceries are a lot more than what they used to be. Gas is a lot more expensive, housing market's a lot more expensive, but our wages aren't keeping up. It seems like a game at this point. The people who have the money, they don't even notice these changes, right? But the people that don't have it, you feel it the most. It almost seems like they're just squeezing this middle class completely dry from both angles. And it's like, if you stop treading water, right, in this middle class, if you just kind of give up and you don't try to increase your income, your purchasing power gets completely shot. So it's like the only thing you could really do is just play the game. But it's like, you're going to get tired. It's hard to maintain. It's hard to keep it sustainable. There's only so much more money you can continue to make, right, in your current line of work, maybe with an additional side hustle. Like, at some point, this has to give. But it's like the only thing that I see as a solution to this mess is that we need to actually make more money. And I don't know about you, friends. You can leave a comment down below if you have a different mindset of this, but it just seems like it's a game at this point. They put a price on something and we're expected to pay it because we have to. We need it to survive. If milk is a certain amount and they raise it, we now have to pay that, right? It's like a requirement. Everything is going up in value except our wages. And it's making it very hard to continue to tread water for a lot of people. That way, friends, I think a lot of us as dividend investors, we're thinking of the future. We're trying to position ourselves as best as we can, to have a good solid foundation in retirement. But it's hard if you're a younger individual, right? I'm 28 years old. And to see the people that are going to retire now realize that everything that they had planned for actually isn't even working because now everything's so expensive and their calculation was off. I see a lot of older people. The other day I saw someone about 70 years old working at Chipotle, struggling to run the register, getting trained by a manager who was maybe a quarter of their age. And that made me realize, that what they're saying in the news about people being unable to retire is actually happening. The only thing to really do, friends, to stay afloat is you just got to find a way to make more money until this thing subsides. That's the first and foremost. And the other thing I didn't really mention on this list is you just got to be smart with your money. You got to live within your means. A lot of us, this capitalistic society, we buy that car we can't afford. We buy the clothes we shouldn't wear because we don't have the money to spend on it. For me, friends, I make $130,000 in California, just myself. I'm a dividend investor. I invest wisely with my money. I think about my financial future, but you don't see me driving my Mercedes. You don't see me driving a Tesla. I drive a Toyota Camry, a 2014 Toyota Camry. I don't really buy clothes. I live at my means. And this is my means in current society, right? Thinking about my future at this point. I'm not at the stage where I can save this much, invest this much, and also drive that Mercedes or also drive that Tesla. I'm not at that level. So when I look around and I see people, I'm like, is everyone making more than me? Because they drive nicer cars than me. They have nicer clothes than I do. Like, where do people get this money? And that's a concern because I doubt that most people make more than $130,000 that live this way. So it's just perspective, a little bit more of a rant style video, but I just wanted to just acknowledge, friends, that this is a hard time. And if you're here thinking about your financial future, thinking about how to navigate this, yes, it's great that we're choosing to be a dividend investor, but that's just a piece of this. Being a dividend investor is not going to help you today. It really isn't. Making more income is what's going to help you today. And if you look at it further than that, making more money, making more income today can actually help you invest more for your dividend portfolio, as well as being able to live better today. But friends, I feel it. I just want to acknowledge that you're not alone. This is a very, very odd and eerie time right now. So now with a lot of this doom and gloom out the way, friends, let's get back to the portfolio update a little bit. We'll get past this. We'll touch on that later. We'll see how this goes over time. But as always, we got our portfolio update. And I'm going to do it a little bit differently this time around. I'm going to go through this list and just kind of answer what I can. That way I make sure to answer it. And, when we get to the portfolio chart, we just kind of run through it. Go through it, have fun with it, show you what we can, and kind of break down a little bit transparent version of looking at my portfolio. So for this first one, friends, how much do I fund my portfolio and how often? Well, for those that have known, I used to fund it a lot more, but at the current time, this current rate, I'll be transparent. I only fund it $100 every single week. That has been my pace for up to the month of October. Starting just November 1st or 2nd or so, I finally upped it to $150. And as far as the sector allocations and percentages, I'll show you that, on my chart. And as far as my current number of holdings, friends, I have 51, and you'll see this when we get to the chart, but I think it's just important to say my current dividend yield. I'll also say it when we get to the chart, as well as my expense ratio. But let me just speak on this real quick, friends. My current short and long-term plans for the portfolio. So my short-term plans, friends, is just to continue to fund $150 every single week into this portfolio. Still kind of on the shorter term. I think 2 to 3 years is still short term. I'm trying to reach 100,000 dividend portfolio size by the age of 30. And this is in addition to, trying to continue to build up my pension on the back end, right? I'm a state worker, so I'm building up a pension. And then as well as building up a 457B as well through my employer. So I'm funding into my pension, funding into the 457B, and also trying to fund into this dividend portfolio and into going into my goals, right? That's why I'm going to speak on that on my next video and my plans. But I also want to pay off debt. That is a priority of mine. And I did, if you're curious, mention how much debt I have in about 2 videos ago. You can find that and look at that if you're curious. So that's kind of like my short-term goal. In addition to that, I'm also trying to save up for a house. I initially wanted to buy a house by the age of 30, but given this crazy economy, I still don't think that would be wise. So just kind of looking at how things stand, I'm not so much in a rush anymore. So that's why I want to pay off debt. And then once my debt's paid off, I want to really just blitz and start to save up cash and be ready. So hopefully within the next 5 years or at the 5-year mark from now, right? I'm 28 years old. At the age of like 32 or 33, hopefully by then I would have blitzed a heck of a lot of cash, and I'd be able to set myself up for a nice rental property or 2. And that's kind of on the shorter term. My long-term plans, friends, if you've been here for a while, I want to retire as early as I can, comfortably. And the key word is comfortably. So in order to comfortably retire, I'm kind of calculating that I'll be ready to do that at the age of 50 to 52, especially if I stay as a state employee. If I don't stay as a state employee, the pension won't matter as much. Maybe I won't have to wait till 50 to 52. I would probably do it a little bit differently, and maybe I'd make it around that same age, if not earlier, right? It just depends. Health insurance and retirement is a big deal. And if I can make it to the age of 50 to 52 to retire with the state after 25, 26, 27 years, I would actually have, health insurance covered at that early age of 50, right? Which is important. Health insurance can get expensive in early retirement, but I won't speak on that too much. And as far as how much my dividend portfolio currently pays me in dividends, friends, let me just show you real quick actually, because then I know a lot of you guys actually stay for the dividend portfolio update. But let me show you here, because you're going to see this anyways here on the next chart. But my current portfolio value is $68,417.48. And the return there doesn't matter so much, but that's just the value of my portfolio. As you can see, again, I have 51 stocks. But just to show you here, we'll get straight to the point. My annual dividend income at this moment with this portfolio size is $2,273.07. If you break it down, because it's fun, right? It's fun to break it down. On the monthly, it's $189.42, which is pretty respectable now. On the daily, it's enough to cover Starbucks. Definitely enough to cover Starbucks now. I don't know if it's Starbucks and sandwich, but at least enough for Starbucks in today's economy. So $6.23 on the daily. And as far as my yield, just keep an eye on this one here. It's 3.32%. It's going to vary a little bit, going on M1 Finance, but for the most part, it's going to be somewhere in between this and the one you'll see here soon on M1 Finance. And just to scroll down, give you a little update. My current goal, friends, for my dividend portfolio, at least at this moment, is to reach a dividend payout for the year of $2,500. I'm 91% reached. I'm almost there. It says if I invested about $6,500 more at my current yield, I would reach that goal. So considering, the pace that I invest, within the next year or so, I will reach it. But as always, friends, it's always fun diving into that, showing you a little bit, of the transparency of this portfolio and how much I make in dividends. Some people will look at that and say, oh, that's not that much, man. It is something. It happens over time, right? You can't start with the massive nest egg, right? You can't start with the payout of $30,000 or so, $40,000. It doesn't happen that way. You got to systematically approach this thing. It will happen for you over time as you age. Might as well use that time, right? And build a dividend portfolio. At least that's the way I see it. And here we are, friends, in the Jesse's Cash Flow portfolio finally at $68,418.08. So slight difference from the app, the tracking system that I use. It's called the Div Tracker if you're curious, but close enough here. And as always, I'm showing the all-time return here, which is currently reflecting a return of 19.41%, which is $7,469. So we're still in the green, and we're in the green a lot more, now than we were, 2 weeks ago and a couple months ago. This market this year has been kind of, up and downish, but barely as of this last week, we started going up again, which is, pretty nice to see. But market gain is $3,184.83, and earned dividends is $4,284.18. And if we look a little closer here, friends, market gain itself, it's reflecting $3,184, and earned dividends is still above my market gain, which is nice, right? As a dividend investor, that's what you want to see sometimes, especially when the markets aren't doing as great as they could be. But as a dividend investor, this is what it's about. So $4,284.18. All-time earned dividends for this portfolio. And then just going on to last week. This last week, we actually did see a nice turn in the market. As you saw, I had a return of 5.76%. This is pretty similar to the Dow Jones, as you can see here, which is a big kind of gauge point for how I kind of gauge how my portfolio is doing. Over the last 5 days, the Dow Jones had a 4.68% return. For me, over the last week or so, 5 days, 7 days, however M1 calculates it, it was a return of 5.76. So very similar. I like my portfolio to kind of go with the overall market and the overall economy. The Dow Jones is a nice umbrella of how the economy is kind of doing. So as long as my portfolio continues to kind of trend with that, that makes me content. It makes me think to myself that at least I'm doing something right, with this portfolio, which is important because this journey's long. It's nice to have a nice gauge point. But over this last week, like we said, 5.76% return, which equates to a total gain of $3,717.66. And then for market gain, that's $3,695, and earned dividends over this last week, 22.59. So let's see this last month too. So the last month, we're actually still in the green, about 4%. And then year to date, not too bad. 3.64% return in this really wishy-washy market. And there was a time there where I did sell one chunk of Nvidia. I normally do not sell, but I did go on a trip to Greece, and my Nvidia was just doing so well. I took out a little money from there. My overall return has been something I've been really happy with, especially in this year, when you could see the market gain is only $700, but my earned dividends is $1,600. And again, that is what this is about as a dividend investor. So switching to the all-time view again, we'll go down into our sector allocations here, friends. So my biggest allocation, friends, I have it set at real estate at 13%, consumer staples followed at 12%, And then they all trend downwards from here, right? Going all the way down to consumer discretionary at 1%. If you're curious about exactly what is in every single one of these sector allocations here, you can click on real estate, for example, and you can see, all these that I hold. Real estate has been getting hit, more recently for sure, down 9%, about $500. But if you're curious and you want to see, a little bit deeper into my portfolio, I always, provide a link to my pie down in the description box down below. M1 Finance allows an easy link to share my pie. You can click on that if you're curious. I remember when I first started getting into dividends, right? Dividend investing. I always like just kind of taking a peek at people's portfolios, seeing, they hold these stocks, just kind of get an idea of what stocks are out there. So if that's something you're interested in, friends, by all means, click on the link. It's free. You can just click on that, go at your leisure, because I know I don't really cover every single sector in these videos. It would just take way too long to do that. So I just briefly kind of go into this. And then also now taking a look at my best performers, right? And then we'll go into the worst performers by sector, right? Tech is my best at 152% return, followed by energy at 83%. And then it takes a bigger chunk of a dive here at 34% return, but still nice in the green. And as far as some of my worst performers, friends, healthcare minus 25%, communications minus 12%, and real estate, yes, continues to flop a little bit, but it will come up. It's just the market timing the cycle, and you feel it. You feel the housing market not performing to its best right now. And it does reflect it here, right? Minus 9.47%. But a nice way to kind of show you which actual holdings I have are performing the best is I'll go into my holdings. And I'll show you Nvidia is my best performer right now as an individual stock holding at plus 237%, followed by Exxon 120%, and then Aflac 65% return, Chevron, a lot in the green here, a lot of big gains for sure from a lot of these companies. And then I think Walgreens is probably my worst at the bottom, or 3M. 3M is actually my worst, but not by much. 3M is minus 37.89%. And then Walgreens is minus 37.52%. So Walgreens is an interesting one. I have quite a bit of it for sure, 67 shares. I've held it for a while. I remember it was plummeting during, right before COVID. COVID hit, it did good. It was actually one of the holdings that I was actually doing very well. And then now again, because of the management and other things going on, it's taking a hit. I hold it for now as an example, just to continue to show that over time, we just got to wait and see what happens. They've been paying a dividend for a really long time, and hopefully that continues. I see it continuing, but it really just depends. Live by the sword, die by the sword is the way I look at that stock right there. So time will tell. It's hard to know if it'll actually make that switch to a modern day store. So we'll have to wait and see. Or modern day healthcare, who knows? This is a nice way to kind of just show you some of these holdings. Apple's here, for example, up 30%. McDonald's and their $18-$20 Big Mac coming up here in California is up 16%, and PepsiCo, and just a couple to show you. These are the holdings that I have in my portfolio. If you're curious, you can pause and take a look here if that's easy for you. And then just to get a little bit more into the bones, let's get into the bones of things, a little bit more into the data, right? So this is the data of my portfolio here. As I told you, I have 51 holdings. This is my current dividend yield at 3.47%, and then my expense ratio is very low because for the most part, I am managing my own portfolio, and I like it that way. I like actually being in control of it. I get enjoyment out of being my own investor, if that makes sense, holding individual holdings, even though some can argue, hey, why do you hold 51? That's a lot. You can just get an ETF or an index. And, I totally understand that, but I just get some enjoyment out of holding these 51 stocks and just seeing how it goes over time, right? For myself, I just enjoy it. And my current dividend yield, just to touch on that a little bit more, is 3.47%. I think the div tracker that I was using on the app showed like 3.3%. So like I was saying, it's somewhere in between both of these. Either way, it's in alignment with where I want it. 3.4 is a little higher than what I would like, but I think it's because this economy has been pushing some of these stock holdings down. And typically when the price goes down, the dividend goes up, right? That's just how it works. So my dividend yield is actually slightly higher right now than where I would want it to be, but it's still within range. It's not anything, too crazy like 3.8 4% yield. At that point, maybe I start to look at it a little closer. But even then, I have a lot of trust in the holdings that I have in my portfolio. A lot of them have been around for a really long time, and there's a reason as to why I initially selected them for my portfolio. So just some of the data, I always like touching up on this. But friends, we made it. We made it through the video, and that's going to be it. In 2 weeks, we'll touch on the deep dive that I've been working on. We'll get to part 3, where I'll actually break down the plans. For example, the plan as to why I increased my funding at this time, additional plans as to what I'm looking to do with this portfolio in the next year, 3 years or so, 5 years, and what that looks like. So we'll play with those goals and those plans a little bit more on that next video. But as always, friends, I appreciate your time. I appreciate you showing up here. I see people do come here and watch these videos every 2 weeks. So I'll continue to be here regardless, but it's always nice to know that people enjoy these as well. So until the next one, friends, take care. Continue to invest. Watch out for these markets. Don't let them catch you by surprise. See you then.